Hey everyone, Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/wavetech. Sign up for our software. You get market grid on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you who have already signed up, thank you so much. Welcome everyone to the Kendall Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, folks, as we come into Friday, as I always talk to you about, is the intermediate database output. We will see our models run on Friday night. Right now, we're at 84.9% bullish. I don't have a high expectation that we're going to see a further expansion of the bullish percent level, and we do appear to be getting at an extended level from the bullish percent level, but there's still a lot of trend left in the intermediate trends, and I'll talk about that when I go through the database here in just a few minutes. But as we look back on yesterday, we saw continuing claims come in a little higher than expected. I thought there'd be a decline in those numbers, and we actually saw a slight uptick in the actual claims. The new claims were around 793,000, and that was perceived to be a better than expected number. With most folks, it was in line, maybe a little bit worse than what I was expecting. But overall, what this tells us is that this is not a good situation, having 800,000 people filing for the first time claims. And what that really means is it plays into market sentiment, which is about stimulus. As we know, stimulus is everything right now. Meanwhile, the Congress is busy doing other things of business. They're not really worried about the stimulus until April, because that's when a lot of folks will get cut off. So they're just going to continue to play the same game that we've watched them play virtually going back to October of last year. Now, the 1.9 stimulus will come to market. As I mentioned in previous videos this week, I talked about the fairy godmother, which is Janet Yellen, coming into the Treasury and going to spend all the money. And Powell continues to back up the rhetoric as he's telling you that we've got to keep our foot on the pedal for a while, for a long while actually, and keep rates very low. Meanwhile, we're seeing all types of configurations happen in interest rates and a consolidation in them. We're also still seeing this very steep yield curve, which is going to continue, as I've been talking about for probably 6 months now. But as we look at today, there's virtually nothing really coming out. There's a few earnings reports coming out, but nothing that's really that material. Most of the earnings that we've seen come out this week, as I've discussed, are better than expected. About 82–84% of them are coming in way better. So my question is always, is it the analysts really bad at doing an estimate, or is companies doing better than expected? And I suspect there's an underlying theme to keep things looking fairly rosy from the market viewpoint and keeping the stimulus in play as we look at some of the economic numbers. Going back to October, I've been continuing to tell you that I expect to see the economy slow down. That's still what is happening overall. We're seeing some mixed numbers, but it's being overshadowed by these positive earnings, and the media continues to kind of just gyrate into this dialogue around the stimulus. One of the things I do want to discuss, and I am going to cover gold and silver tonight, is this whole story around squeezing silver and gold. And in fact, they've been going just south. I'll show you shortly in the technicals that silver's right on the edge of rolling over and just not collapsing, but going down in prices way into 26, maybe 25 handle. We'll talk about that here in just a few minutes. But just know that silver and gold are not GameStop. They're not a squeeze play. Even though people are talking about bidding up cash markets that cause the paper markets to catch up, it's just not going to happen. And it's sort of like going against currency markets. Because I've been around for a long time. I've seen central banks coordinate, selling dollars, buying dollars, doing things to stimulate the currency markets. In the end, they're just too big to manipulate for anyone. And I do believe that there's a big game being played here, and This is the wrong place to try to win. They always say pick your battles. This is the wrong battle to fight, and the prices are telling you everything you need to know. I still, as I'll go through here in a few minutes, I still think gold and silver are setting up major bottoms, but there's a lot of work to be done, and a squeeze play is not in the books. But as we look at Friday and finishing this week, I talked to you early in the week about a potential R1, S1 week on a weekly basis, both on the NASDAQ and the S&P. And that's exactly what we've had this week for the most part. Whether it expands today or not, I'm not sure. We'll see how we come into play. Overnight, we're seeing a little bit of weakness. I don't think it's material. We're still holding some of the numbers I've been talking about all week. And in fact, the markets have been pretty boring. And when you look at the ranges, we just keep having this underlying bid, and the markets keep climbing this wall of worry, or this very shallow and weak trend that's underlying in the markets. But we are seeing some acceleration on the trends. We're seeing some things start to happen that could set up some further strength, and I'll talk about that in the technical section here in a few minutes. But from a fundamental standpoint, no news coming out today, a few earnings reports. There's really nothing that's likely to stimulate from the outside. So we'll be operating on market sentiment, which is basically expectations for a stimulus. Let's go ahead and take a look at the charts, see how they're setting up for Friday and the end of the week. As I begin with the WaveTech Database review, we're going to start with the intermediate database. As I mentioned in the opening comments, we're at 84.28% bullish. I don't have a high expectation for further expansion of the database. It could happen. I've seen it as high as around 92% in an extreme, but we're definitely getting to an extreme level. Now, one of the things I want to point out on this page is the configuration of the sector positions and what is long in the tooth and where we're likely to see some rotation in the market start to flow to. This is an important thing to look at. As we look at the top four sector positions, we see that consumer non-cyclical up 30%, been on since July. Since June, basic materials, June on consumer cyclical, and conglomerates, all of these up between 21 and 50% from a sector viewpoint. Now, the next level, right below that, we start to see financial, capital goods, utilities, transportation, energy, healthcare, and technology. All of these are in their early stages of the trend, and expectations looking forward are pretty huge. Now, technology has already moved 22%, and that's substantial. The second largest move here is at 11% on capital goods, but technology is definitely leading from that standpoint, even though it's only 85 days of the average position of 244. Let me go into just a little more detail on this particular sheet. These numbers that you see over here, 41 of 245, 46 of 211, and so forth, that tells you that the average holding period for this model on this sector is 245 days, and this one is 211. So this is giving you some forward-looking expectations. I could break it down even further on what the percentage expectations are, but this is where the rotation wants to go. So if you're a WaveTech user, you want to focus into looking into these sectors for ideas. Let's take a look at the dailies from that same viewpoint. Now, as you know, we actually saw a big recycling of the short-term database. We went from around 71, 72% bullish down to 27. Now we're back at 49.34. We did see approximately 340 new buys and 160 sells, so we had a net positive. We've upticked just slightly from the 48.2 last night up to 49.34. But let's look at the sectors. We see that most of these sectors, with the exception of utilities, is the longest duration of the expectation. The other one is services, which is up 12%, and it's up 60 days of 46. So it's extended, and you see over on the far right it says hold. That just tells you that it's extended from its normal holding period. But all these others are brand new positions, capital goods conglomerates, consumer cyclical, and we're seeing energy in play as well. And technology is recycling on a short-term basis. So this is looking at this sector rotation that's going on here. You can see where the markets are likely to flow to. So we'll be continuing to watch this in great detail as we go forward. As we begin the review of the S&P tonight, we're going to do the Wayback Machine, and we're going to look back at a year ago. This pattern that I am putting my cursor up by right now, 1 year ago, 2/14/2020. Market was in this narrowing range, climbing the wall of worry, and then we saw it penetrate through the 10-period moving average. Now, I mentioned that there were some cycles coming in. There's quite a few things that are happening here. So we're going to have to watch this current pattern very closely. I've also talked about that annual event. So coming in to right where we are right now, around 214 to around 221, is going to be a critical area to watch in the market. So let's go over to the current market conditions, and you'll see a similar pattern where we've rallied up and we're now crawling along, and even the PPMs look the same. I didn't point those out really clearly, but they look very similar. If you pause the video, you'll see that they look very similar as we look back on a year ago. So this is an interesting pattern that I'm going to be watching. As we look at today's market grid here, you'll see that currently we've had a high of 39.14, a low of 39.01. We're looking at R1 39.20, S1 39.03. So we've actually traded below S1 overnight. I would suspect we could see a 38.94 level. And the key number, as I've been talking about for multiple days, is going to be the 10-period moving average. 38.68 is that number. It's on Monday, Sunday night, that number is going to be around 38.88, 38.84 range based on the rate of change. And we're seeing that the PPM1 is actually accelerating, so that 10-period moving average is accelerating, is likely to be substantial support. We did see the low earlier in the week. At the 38.78 level, and that also represented on a weekly basis at S1 was 38.38, so we didn't quite get that low, but on the upside, 39.22 was the high. So far, 39.2850 has been the high in the futures. Let's take a look at the SPX. These numbers have a little bit different reference, and this will, on a weekly basis, you'll see S1, 38.53, so we didn't get there. We got to 38.84. R1 is 39.20. We did print 39.31. I talked about that in the opening comments. But as we go to the daily, the same pattern that we saw a year ago is also obviously on the cash. They're correlated markets, both being just cash and futures. But we are seeing a further expansion of the volatility over the last few days. So we're seeing volatility expand a little bit as we look at the expectations on a market grid for today. R1 39.24, S1 39.08, S2 3900. I've been going on about this for multiple days. As long as we don't close under 3900, this will keep a positive tone in the markets. And just like with the futures, the 10-day moving average will be a key factor in the underlying support, and that also is going up about 20 handles. That'll be 38.75 as we come into early next week. Next market that I'll cover is the NASDAQ. NASDAQ futures down 12 handles overnight. Pretty quiet overall. We're not seeing a lot of volume or a lot of volatility in the markets. We are seeing almost the identical setup with PPM1 accelerating, PPM2 and 3 flat or down, which is typical in this kind of upward slope or low volatility and low momentum rally. Now we have moved up to 0.60 on PPM1, which is positive, and depending on how we trade over the next couple of days, we're likely to see the potential for us to break out. But the scary part is, with the market grid so contracted as it is right now, we could see an RTX sell signal that will set up even more sideways and the possibility of a minor correction to come out of this level. Same story on NASDAQ. 10-period moving average key number 13,379. The low overnight is 13,674. We go to the weekly chart on the NASDAQ. You'll see that S1 13,410, low 13,516, came just short of that high 13,769. The R1 13,785. So we're traded in between S1, R1 on the NASDAQ, but we're not really seeing acceleration on the PPMs on a weekly basis, but they are at robust trend levels, which suggests that major support at the 10-week moving average. Even if we were to trade through the 10-day, there is major support under this market. There's not a high level risk of any major turnaround at this time, and we'll continue this trajectory of this market moving higher as we go forward. Next market that I'll cover is silver. As I mentioned in the opening comments, silver is very close to rolling over. There is some major support around 2640, 2630 level. A break below that level will signal much lower prices, and I'll cover this and look at the expectations on the weekly chart here in a minute. But the PPM1 is rolling through. It's cut through its second derivative. PPM2 and 3 are very flat from the standpoint of the momentum actually growing here. As I talked about, we could see this decline set up if we break through these levels, and that's 2640, 2630. I'll bring up the weekly chart so we can get some expectations of what the downside risk is. On the upside, 2721 is where we're trading toward right now with a high of 2711. A break above that level wouldn't really give us much more of an upward expectation. Possibility of 2721. At the extreme would be 2749. Key level on downside 2688, which is S1. Breakthrough that would set this much lower prices in the pattern toward 2670, 2652. Looking at the weekly graph, the key number here is the 10-week moving average, 2585. This is what I was referencing in the opening comments, that we could trade into the 25 handle. While that would be lower prices, there's still a substantial amount of support. We also have serious uptrend in the PPM1 at a plus 1.11, which is suggesting there's only about a 10% probability for the market to decline below this 2585 level. If it did, the absolute extreme would be 2505. So I'm not expecting like a complete collapse. What I was referencing in the opening comments is that there is some downside, and you can see the PPM starting to roll over, even though we have some reasonable, robust trends right now. PPM3 is trying to cross to its first derivative, which is somewhat of a negative. Really what it's setting up is the potential of going down to that 2505 level into this moving average pattern. The final market that I'll cover tonight is gold. We're going to start with the weekly gold, and we have seen a pretty substantial decline. We've traded down as we look at the market grid for the week. 1796 is S1. We've been as low as 1807, so we're getting close to that S1 number. On the upside, we had a high of 1856. We traded just above R2, so we're working on an R2 S1 number. But as we look at the PPMs, we're still seeing a lot of negativity, especially on PPM2 minus 0.38. That number is at 1875, and it is declining 7 cents per week. So 1865 is going to be major resistance as we come into next week, and the potential for us to trade down below the 1800 level is continuing, possibly seeing the 1777, maybe even 1760 level would be a retest of the December lows. So there is not a very bullish pattern right now, and as I mentioned in the comments, there's a lot of work to do, but this overall pattern is bullish, but it's not bullish at the moment. This will complete the video for tonight. Thank you for being part of the channel all week, joining our live streams and all the other events that we have. We really appreciate everything that you folks do in our community. Thanks again. Have a great weekend.